Good morning, everyone. Thank you so much for joining us today on our webinar for mortgage professionals all about bank statement loans. Now, as questions come up during the presentation, as I'm sure they will, please go ahead and use the little questions tab. We're going to be reviewing the questions and we'll do an extensive Q&A at the end of the webinar. With that, I'm going to turn it over to today's speaker, Jim Voisart. Jim, take it away.
Good morning, Rose, and thank you, Rose. Hello, everyone. Hello, Tim. Tim, you got me live as well. Hey, Tim, you there?
Oh yeah, I'm here, Jim.
Okay, good. Well, welcome everybody. Welcome to Wednesday, April the 14th. Time is flying. We're already through one quarter and on to quarter two this year. So today we'll talk about bank statement loans. We'll stick to that one product, a product that we think we've learned a lot about in the last 4 years, and we've become very good at it. So we'll speak briefly about LendSure for 30 seconds or less. Why would you want to partner with us? What's happening in the business owner landscape today? Pre-qual process, how important is that in a market like we face and see today with multiple offers and above list price offers? Program specifics on bank statement loans. We'll look at 2 loans that we actually closed. And then if you have any questions, we have our expert, Tim Turley, on the phone that can answer any product-related underwriting question. Right, Timbo?
Yes, sir.
Okay, so been in business 5 or 6 years. We're headquartered here. Tim runs a big operation, a fulfillment center in Atlanta, Georgia, and they're fully capable of docking and funding loans for you. We have a small operation in Rhode Island as well. When we say highly experienced non-QM management team, we're not saying we're old. We've just been doing this a while. Today's home buyer market. I would say it's a highly competitive purchase market. I'm not sure you guys would, but we're seeing these stories. We're getting loans in where sellers are demanding, immediate pre-quals. I have many offers. I need to see a pre-qual that's legit, today, or I'm going to take the next offer. So we know the market's on fire with multiple offers and above list price. I don't need to read you the bullet points, but the time to deliver for these homes that are on the market that have multiple offers is now. And if you partner with LendSure, we can get loans done in 8 days. We can get purchase money loans done in 10 days when they're fallouts somewhere else. As you know, borrowers that show their assets and or have a pre-approval in their hand have a better chance of getting an accepted offer. Why does the self-employed person sometimes have trouble documenting their income? Well, we know when their first instinct when they need a loan is to call their hometown bank, and they are asked to show a set of tax returns. We won't say much more about the IRS or tax returns, but sometimes there's just not enough shown on that bottom line, taxable income, line 37, to qualify a loan. And we don't need to talk about how they get there, but we look at their bank statements and see a lot of deposits. Notice I said deposits and not income, because everything on the bank statement page isn't necessarily income, it is a deposit. What LendSure has been able to do is determine upfront for you guys what the real income is. If we get to a number that tells you the income and it tells us what's the debt ratio versus his debts. So now we know the income because we're good at that. And we get you that number early in the process, sometimes 2 days, sometimes it's 4 days. Depends on demand, what's happening. What's beautiful about LendSure, 3 weeks from now, 2 weeks from now, when we're getting close to CD, we're getting closer to loan docs out, we're not changing the income. There's no mystery around, oh, the debt ratio just got out of hand. We have the income fixed, and it's a number that you can take to the bank in the first 4 days. Now, something else changes in the loan, that's something else that changes. He bought another house, they bought a car, we didn't know that. But you're going to have a solid number up front from a very experienced team who do these and have been doing these for 5 years. Half of our account executives have been here 3 years. They understand the bank statement process. They know what expense factors are. They know how to get through a bank statement up front and help their inside team, who are really experts at determining the income. It's a huge market. I would say the self-employed market is still underserved, and the demand that's coming at us in the next year, 2 years, 3 years is going to be greater than what we've faced and seen the last 3 years. Here's people who we lend to. We lend to people like nail shop owners. We lend to people that run spas. We lend to people that may run an auto shop or have 2 locations, 2 auto shops. All walks of life are eligible for the bank statement loan. How easy are these people to find? Well, they're all marketing themselves. They all got their ads out there. Their phone numbers are available. They're easy to find. They're not trying to hide because they're looking for what, Brian?
Money.
They're looking for money and they're looking for business. So when we get down the process of the bank statement analysis and we discover in the bank statements themselves, there might be something called COVID impacted businesses. We'll let Mr. Tim speak to LendSure's approach to this.
Thanks, Jim. So we all know what happened last year with the pandemic, and it created a lot of challenges, especially for us, because no one really knew what was going to happen after March of 2020. And so we developed a kind of a unique way of looking at bank statements, because we began to see people whose revenue dropped in April, May, June, and as well as people who took PPP loans and SBA loans. And so now that we're a year later, what we will actually take, say it's a 24-month bank statement program, and we may just eliminate the 3 months that they were affected by COVID. You got a guy that owned a restaurant, he's making, say 10 grand a month in deposits, and all of a sudden March, April, May, his deposits went to zero because he had to close his business, but now he's back. We're not going to penalize him for that. We're going to actually eliminate that and do a 22-month average or a 21-month average. And then you had a lot of people that took the PPP or the payroll protection plan loan, which enabled them to continue to pay their employees. Well, that's over and done with. If they took a PPP loan back in May of last year, we're not going to deduct those funds nowadays. We did originally we wouldn't let them use them funds for down payment, but now we will. The same thing with the SBA loan. As long as we're including the debt ratio and it was taken out back in April, May, June of last year, we're going to consider that they used the funds for what they were intended to, and we're seeing the business continue on. We're going to allow that. Now, if the borrower never carried a balance of more than $200,000 in his bank, and now all of a sudden he's got $400,000 because he really didn't need the SBA funds, we're going to look at that a little harder and may not allow him to use those funds. The other thing that we look at is the forbearance. A lot of people were solicited by their banks and mortgage holders to take a forbearance because of COVID. And a lot of people didn't need it, quite frankly, but they did it anyway because they looked at it and said, hey, we're going to skip 3 mortgage payments, and maybe they wanted to do something with that money to invest it. If we see a borrower that's in forbearance on a purchase money type loan, if they're selling their old house, we're not going to necessarily make them bring it current. If it's a refinance and they show us they've got the assets to bring it current and they're currently in forbearance, we'll consider just refining it and paying it off because they had the assets. It's semantics to make them pay it off, then us turn around and give them the money back. So we've tried to take a very make sense approach to COVID, and we want to understand all the facts up front. But I think the bigger message is that we're going to do make sense loans. And if we can have the whole story up front, and we'll work through it because quite frankly, that's what we're here to do. What do we got next, Jim?
Tim, that sounds like a pretty user-friendly approach to what happened to us in 2020.
It was, and our business has reflected that as our volumes continue to grow monthly because we do make, quite frankly, over 50% of our loans are exceptions to our written guidelines. And if a loan makes sense and we feel like they're going to pay us, we're going to try to figure out a way to do it, Jim.
Agree with you 100%, and we do it. Let's talk real quick about the pre-qual process at LendSure. To me, it starts out with that phone call from a loan officer to his or her account executive, talking about their self-employed person. Might have had a BK 4 years ago. Today, this is happening in his business. I think he's depositing this much money. You're building a little bit of a story, which leads to the new, what we call the IRLA today. It used to be the 1003. You're building to that 1003, which gets submitted, in a day or two, along with a credit report and along with 2, 12, or 24 months of bank statements. The advantage of 24 months is there's no add to rate. That's treated just like a full doc loan. So those 3 or 4 items come into your account executive and they immediately start building the file. The goal here is to get that pre-qual out in 2 days so they can either satisfy their seller's concern or they can go shopping, or both. The homeowner, and we'll call it the borrower, fills out a self-employment questionnaire. It's maybe 8 questions, and it's our opportunity to see and understand their business. How many employees do they have? Do they have cost of goods involved? What's their insurance cost? Do they have leasehold expense? We can't really set an accurate expense factor if we don't know a little bit about the business. So that form's fairly easy to fill out, goes in with your bank statements, helps us get you to a final DTI number. The inside team that works on this, they've all now done, I'm going to say, hundreds and hundreds and hundreds of these. They're very good at figuring out real quick on a bank statement loan. For example, does your borrower's name match the name on the 1003? They're not going to wait 2 weeks to call you back with that little dilemma. Or the banks are changing. We have different account numbers. You're going to know that up front, not 2 weeks down the road. Makes our pre-qual process very valuable because you get a quick answer. I can't see that last slide because I'm blocked. Once the questionnaire comes in, the inside team member will discuss that with the ops manager. And at that point is when your pre-qual with a price and a rate is issued. So you know the rate going in as well. Now, what do we look for in a bank statement borrower? I'll let Tim speak to this because that's Tim's job.
Thanks, Jim. I would just before I get into some of the underwriting bullets here, one thing that we will do is we'll give you your income number up front. So if you're not sure and you've got the bank statements and you're not sure what the income number is going to be, you can send that into your team and we'll have someone do the bank spread and calculate the income up front. And then same thing with a self-employed questionnaire. I think it's a huge benefit that we offer compared to some of our competitors in that we don't have a set expense factor. We actually base it on what the borrower tells us. And I can tell you that there's a lot of people working from home nowadays. There's a lot of people that run their business out of their home. And quite frankly, their overhead is small. They may run an internet type business and they drop ship their products. And so they have no cost of goods sold, no rent, no real overhead. And some lenders will automatically put a 50, 75% debt or expense factor against their deposits to their bank statement programs. We don't do that. We're going to call it what it is, and we may give that borrower a 20% expense factor. So that's a big deal. Now, talking about what we're looking for in the bank statements, there's some bullet points here, and obviously we're going to look at the deposits, and we'd like to see consistency in the deposits, but we also understand that we're coming out of a pandemic and that there's likely to be some inconsistency in the middle of last year, and we're going to take that into account, as I said earlier. The other thing is we want to know what percentage of the business the borrowers own, because unlike some companies, we don't necessarily require them to own 100% of the business. We'll allow a 50% owner to qualify on bank statements, and we'll use 50% of the deposits. Other standard things, I just talked about overhead, figuring out the self-employed questionnaire. Obviously the longer they've been in business, the more comfortable we are with that borrower. And if you're going to send us bank statements in that say ABC company, we'd like that to be where the borrower is, that to be the company the borrower owns. So those are all just things we're going to look for, and the more information you can give us up front, the better opportunity you're going to have for an approval. Right, Jim?
Yes, you are dead on. Thanks, Tim. Sound like you've been around a while. Let's see. Why partner with LendSure? At the top of my list on why a loan officer or a broker would partner with LendSure is flat out our experience in doing this with a seasoned team of AEs and a seasoned team of inside people. Doing what Tim just mentioned, the upfront process and the expense factor and how we approach the expense factor makes us the best in the industry, period, end of story. So we got that part down. This first bullet point talks about compensating factors. Tim mentioned over half of our loans have an exception on them. Some have two. We have one yesterday, $3.4 million purchase or a loan amount on a $4.8 million condo in Miami, Florida, Miami Beach. It's a high rise. It's 4.8 million, and it's one of the lower priced condos in the building. Some of the units are 12 and 14 million dollars. So this guy gentleman wants to borrow 3.4, and it's over our $3 million limit loan size. If we got that approved, it would come with a hefty rate. So that flexibility around LendSure allowed this gentleman to borrow money to get his 3.4 by making him two loans. We took $1 million out of his home in Houston, which is free and clear, and got him a 3.375 rate on that. Then we advanced him another million or 2.4 million on the $4.8 million condo, puts it at 50 LTV. He got a 3.75 interest rate on that. So instead of borrowing 3.4 at 5.5, he got two loans in the threes. That's flexible and that's smart. It literally saved this gentleman $4,000 a month in payments. We mentioned the upfront process. We encourage communication. The broker, loan officer, you got questions about the deposits, the bank statement, anything about the borrower's business, the length of time, etc. We encourage you to talk to your pre-qual underwriters. They are available along with your AE. So those are a few reasons to partner with us. Program itself, 2, 12, and 24-month options. The 2 is new. We'll talk about that here real quick. The full doc I mentioned, same rate as a 24-month bank statement, no hit. A big one here for us, for you and for the borrower, is the P&L statement not required. In most cases, when a lender asks for a P&L to coincide and match up with 24 months of bank statements, what happens in those cases, Tim?
Well, a lot of times they don't match up.
Right. They become train wrecks, right? They just become hard to understand, and there's a million questions. Borrower gets frustrated, loan officer is frustrated. We made it simple at LendSure. 99.2% of the time, we don't ask for a P&L statement. We're going to work with the 12 or the 24-month bank statements, period. Huge industry advantage. These loans you can get up to 90 LTV. Borrower does not have to be 100% owner. They may only own 33%, 1/3. They may own 40%. We will not kick that loan to the curb. We're going to look at it. His 1/3 may be plenty of income to qualify the DTI. We use business or personal. Some people come to us with 2 businesses or 3 businesses. Takes longer, but we will evaluate and analyze 2 or 3 sets of bank statements if that's what it takes to qualify your borrower. Tim touched on this one already. We have the best expense factor program going in the industry. The new 2-month bank statement program. Hey, we got one last week. Guess what, Tim?
Tell me, Jim.
The broker, I won't mention any names, forgot to send us the 2-month bank statements. So that slowed down the process just a little bit.
Yeah.
We got them in an hour later. So some people call this product the P&L program. It does. This one does. This is the only one that we have that requires a P&L, because we're only looking at, in this case, March and February bank statements. So we like to know what he did in January or she did in December. To me, this borrower is someone that's in a hurry. They got an accountant that they work with. They've known for years. They can call up their accountant friend to get a P&L done in 15 minutes or less. Faster process than going home and combing through trying to find 12 months of bank statements, which sometimes are 6, 8 pages a piece per month. So that makes it a little more streamlined if you have that accountant that's on call. This is available for owner-occupied properties only. We don't do them on non-owners. There you see the LTV and the loan amount. And also, I think of the word trend. If you looked at the last 2 months bank statements, there may have been a little trend in October, November that we wouldn't necessarily like. Under this program, we wouldn't see that trend. We wouldn't know that October's deposits were lower than September's. We wouldn't be uttering those words, oh my gosh, declining income. We wouldn't know that. So that borrower is the person, I think, that's suited for this new product. Us versus LendSure, we already mentioned where we lead. We don't require P&Ls. NSFs and overdrafts, we don't panic if someone has a few bad checks over the years. It's not going to necessarily, derail your loan. We'll still take a hard look at it. Expense factor we lead there because it's common sense. Here's a loan. I'm going to go to the next one. This one here is too complicated to talk about. But this next loan example is a gentleman that owns 47, this is a bank statement deal. He owns 47 pizza restaurants. He's the franchisor, so he's got franchisees that own and run the stores. So he sells for a franchise price of, I don't know, 35 or 40,000, and he collects 5% of all sales. Rather than that restaurant makes money or not, he's getting 5% of all sales forever. So this is the one I was talking about, the Miami Beach property. So this gentleman lives in Houston, and we're going to end up making him 2 loans. He wasn't able to get a bank loan. His tax returns were just short. We actually seen his 1120s, and they were just short. 707 FICO, not the best, but it's okay. And we were able to get the loan approved. We changed to 65. We're going to make 2 loans at 50 LTV each to get him those rates in the 3% range, not the 5% range. So that's quick thinking and flexibility at LendSure that you're not going to get anywhere else. We're actually selling the guy a lower rate. We're not trying to jam him for the higher rate. Next loan that we closed, this one is this is an Escondido, California deal. He owns 2 auto repair shops. Notice he was bankrupt in 15. That bothers some people. It bothers some underwriters. Wants to do $1.2 million purchase. Nice down payment, not such a good score, right? $34,000 of income is what we came up with after we did our analysis. Here's the wrench. He has $4,500 negative cash flow from some rental properties that he owns. When you add up all those mortgage payments on those rental properties, and you put them on the liability side of the ledger, the DTI became challenged. So the solution for LendSure, we took the negative cash flow number and subtracted it from his $34,000 in income. By doing that, none of those mortgage payments were listed as a liability. We've already dealt with it on the income side. It's a unique thing that we do that many people don't do. So instead of being a DTI fail, this was a DTI success story. Not a great FICO, but we were able to do the loan. And I think we did this at 5.375%. So that's a good niche that we have, that subtracting the negative cash flow if they have that situation from their income. Anything you can add to that one, Tim?
I would just say that if you sit down and you're going to look at a debt ratio, and a lot of people don't realize what a difference it makes by subtracting it from the income versus including it as a liability. But we do loans, a lot of loans that competitors have denied that are, that their guideline requires a 45% DTI and they're at a 47. This can bring that back down within line. Same thing at a 50% guideline and they're at 52, it can bring it down within line. And obviously the higher the income, like in this case, it has a bigger effect. It's just another way that we do things a little bit different, but it makes a lot of sense. And we're able to get borrowers loans that they couldn't get elsewhere.
Yeah, and the quality of these loans, as we look back at them over the last few years, Our average LTV on the securitizations is running right at 70%. So there's 30% equity or more in all of these. In many cases, we're seeing loans at 50 LTV, 40 LTV. Average FICO, Tim, I think we're going to say around 710 on that book
Yeah,
of business.
the last securitization was at 716.
716 scores and a 70 LTV. Average time in business 5 years. So these aren't rookies. These people have been, they paid their dues and they know their business. Loan performance on these has been excellent. There's just not been any issues with delinquencies. So we're qualifying good loans and people are having good experiences with LendSure. That's not the only thing we do. We're not going to get into all these other programs, but I'll just list them. Yes, we do non-wardable condos, condotels, popular in Texas, Florida, California. The larger acreage property is often a Fannie Mae fallout because the ranch is sitting on 14 acres or 24 acres. Call your AE on those. We will look at them. 2 to 4 units are acceptable. We do a lot of those. Second home lending, jumbo loans. I just described one for you. We're seeing more and more of those all the time. Our lowest listed rate today, when you think about non-QM and then this interest rate, our starting rate, which is a 30-year fix, I shouldn't say starting rate, it's a 30-year fixed rate, is 3.375. So it's not like we're talking about, high rate loans to risky borrowers. It's not what we do. We're looking for the Fannie Mae on the edge of Fannie fallout. And then the DSCR, that's the investor program where we don't ask for any income. Won't talk about that, but feel free to talk to your AE about loans for investors. Very easy underwrite. People that have a lot of money in the bank, they don't need a job, they don't want a job, we can entertain those loans as well. Talk to your AE. And one of our most famous products today is this 40-year term. Starts out with a 10-year interest only, rolls to a 30-year fixed, and we don't bump that rate. So they know going in 10 years from now what their rate is going to be. It's a great program. It also gets your payment. It's the lowest, using that program, you get the lowest payment in the non-QM space. No one else is doing this. We have a rate buy down program where you can buy the rate lower. When you combine the rate buy down, where you're taking a rate from 5 down to 4 or 4.5 down to 3.75, put it on an interest only basis, it's the lowest payment in the industry. You can sell the lowest payment at LendSure.
I think one other interesting point on the interest only is that on our, and I know this is not about the DSCRs, but on the DSCR program, which is our debt service coverage ratio program, we'll actually figure the debt service coverage based on the interest only payment, Jim.
That's a great option. And some of those loans also, Tim, I think you'll tell me cash out on those also qualifies as reserves.
Yes, that is absolutely correct.
The last bullet that's on the slide that says we can finance an extra 2%. That 2% in points could be to buy the rate down a full percent. Could also be used, leave the rate alone. You could use that feature to pay the broker fee. If you want to make 2 and the customer doesn't want to pay you, the $20,000 out of pocket, he can choose to finance it. We'll add it to the loan, call it an EDLTV loan. The extra 2% takes it to 81.6. We're still going to price it the same. We're not going to raise the rate. Rate stays the same. Your fee is covered. They don't need to go out of pocket to pay you. Very easy sale for the loan officer to tell them, keep your 20 grand at home. I got it worked up in the loan for you. Again, that takes a little more detail to explain in many cases. So talk to your AE. Great program. Rose, are you still with us?
I am. Thank you, Jim. And I wanted to let you guys know about our private label resource kit that we put together for you. Now, this kit includes banners, it includes flyers, and it includes emails that you guys can put your logos on. You could put your contact information on, your disclosures on, and you could start marketing this program today. So these are very easy to customize. If you have any issues, though, feel free to contact your LendSure account executive, or you can email me directly by I'll provide the email address in the thank you email. So feel free to take advantage of those. I wanted to also share a real quick way that you could start networking with these small business owners and these self-employed borrowers in your community. Now, this is Facebook. So in Facebook, you do a search on either your city, your state, or your geographical area. In this example, I put in San Diego and then followed by business owners. You're going to get a ton of different results. So go down to here to groups where you filter, and you filter by groups. Here you will find a number of different groups that are dedicated to small business owners. Now, the great thing about these groups is that you can learn about what their needs are. They talk to each other about their needs, and they make recommendations and referrals to each other. So this is a fantastic way to reach out to the business owner market. I'll turn it back over to you, Jim.
Thanks, Rose, and I'm glad you were still there. Thanks for being supportive. This is the last slide of the day, and I promise I will shut up and stop bragging about how great LendSure is. But our support for you doesn't stop with this 30-minute webinar. We're there for you. One thing I didn't mention, a lot of LOs, a lot of you guys deal with realtors, and they're your referral base. We've got a bridge loan program to pull equity out of property A to go buy property B when someone's in a hurry to sell their house and they don't want to wait on the property to sell. So the bridge loan takes some explaining, but it's a great product that we can assist you with explaining, selling, offering it with your realtor partners. So call your AE anytime if you want to take a unique program to their realtor base and make yourself stand out with a program that no one else really has. So that kind of
Jim,
support is available. Just ask.
yeah, Jim, I was going to mention one more thing about the bridge. In this market right now, with a low amount of supply and a high amount of demand, the bridge program is huge because they can go in and make a non-contingent offer without having to sell their home. It's a huge product, and it's just every day I'm seeing more and more of them. It's a great program.
Yeah, and the other great thing about it, there's a lot of good things, but the number two biggest advantage is on the first loan, the bridge itself, which is the departing house. For 1 year, we don't have an interest payment. We don't have an amortized payment. We have no payments. The only payment the borrower has to worry about is the new house. So 12 months, no payments. If we got an existing mortgage on that first house, we pay that off as well, and we wipe out that payment. So anyway, support's available. Contact your AE to talk about these other great programs. With that, I'm done. Thanks for listening. Hope you all have a great week.
Wait a minute, we still have our Q&A, Jim.
Oh, let's see if we have any questions.
Now, everyone, go ahead and use the questions functionality and submit your questions, and we will get to it. As for the DSCR, what is the ratio for the DSCR? Tim, do you want to take that one?
Sure, Rose. So we will allow the down to a 0.75 currently. So if the payment, the new PITI is $1,000, and the rentals can be as low as $750, and they would still qualify as long as they met the other requirements.
Okay. What are our rates looking like for the interest-only 40-year?
Well, I looked at our pricing sheet yesterday, and they can begin, as I just mentioned, depending, we're LTV and FICO score driven on pricing. So the lower the LTV, obviously, the better the rate. So rates range from 3.375 for a high FICO borrower, and the higher LTVs up to 4.50.
Okay. And I'm getting a bunch of questions on whether this is being recorded and whether they can get a copy of the slide deck. The answer is yes and yes. In about an hour, you're going to be receiving a thank you email from me, and that will include a link to the slide deck and a link to the recordings. So I've got a question from Rory who wants to know, do you also consider prior housing expenses, mortgage or rent, when doing the bank statement program?
That's a Tim question.
I'm not sure I understand. Do we consider prior mortgage or rent? If they currently have the mortgage, yes, we're going to include that in the debt ratio. Um, but if they no longer have it, we wouldn't. I'm not sure I understand, Rory. Maybe if I'm not answering the question correctly, please give me a little more detail what you're looking for.
Okay.
If
All
it's a bridge loan, we would have paid that first mortgage off, so that wouldn't count.
Yeah,
Uh,
I thought Rose said the bank statement program,
okay, I got you.
but on the bridge loan, we don't include a payment for the departing residents. There
Correct.
is no payment included in the DTI.
What about the taxes, Tim?
On the departing residents,
Correct.
yes,
So the tax payment would be in the debt ratio.
correct.
Okay, got it.
Jim, do you want to talk a little bit about what our broker approval process is? So they want to sign up to be with LendSure. What do they do?
Two things. If you got a laptop, log on to the LendSure website, ask for broker sign up. The first form that'll pop up is it's called a TPO temp code. It's a form that takes you all of 3 minutes to fill out. It's sent to your account executive. With that form, you'll get a code back to you so that you can now enter loans into the LendSure broker portal. That's step A. Fill out a form so I get my code so I can submit loans. Step two is you enter the co-mergence world from that same page. Co-mergence is a vetting company that will process the broker's application. It's more like 4 or 5 pages online. This is all done, on the computer. There's no mailing. There's nothing like that. Fill out the 4 or 5 pages. Within a week, we get a call from co-mergence, and we make the decision that broker's approved or not. That's very rare that you're not. In the meantime, you can still submit that 1003, your bank statements, and your credit report to your AE before you're approved. We don't require you to be approved for us to get started on your loan.
Okay. Jim, back to that pizza owner loan scenario when he bought the additional home, did you price that as a second home or an additional primary?
We treated the house in Houston, which is departing, as a second home, and we're treating the condo in Florida as a primary.
Do you do construction to permanent loans on someone who owns the land?
Timbo,
Sorry, I was.
do we?
If they currently we will not do a land loan. We'll do the permanent financing on something like that. We wouldn't do the construction piece.
Okay. And what's the minimum FICO and max LTV on our bank statement program?
Lowest FICO score on a bank statement is 660. Max LTV is 90.
I
Okay.
would just add to that, Jim, that as we said earlier, we do make a lot of exceptions. So I mean, I did one the other day that had a 658 credit score. So if you've got something close, I would highly recommend you talk to your account executive and not just walk away from it because it's a couple points shy of that. If
Yeah,
everything else in the deal looks good.
good point, Tim. You got your 2 FICO short. You're looking at the loan yourself. You're saying, well, the guy's putting 35% down. That's a pretty significant compensating factor, and in many cases, that alone will override what Tim just mentioned. So we're looking at customer strengths for compensating factors to get around the one issue that may not qualify. That's done on every loan.
Okay. And let's see, Jill and Jose and a couple others have some very specific loan scenarios, which I'm not going to address here because I want to make sure that you guys get as complete and accurate answers as possible. So we want to be able to look at the details of the scenario and then make a determination there. So go ahead and reply back to the thank you email that I'm going to send in about an hour and with that loan scenario, and I will make sure that Jim or Tim or your LendSure account executives takes a look at that for you. Can you talk a little bit more about the construction takeout loan? Is that the same as a construction to permanent loan?
Yes. So if someone went to their bank and they borrowed money to build a property, and they own the land, we will we will provide permanent financing in that situation.
Okay. What's your rates look like on the 30-year jumbo?
Again,
That's Jim.
they start
Go
as
ahead.
low as 3.3, so 3 3/8. They could be that low. That's at 50 LTV, and an 80 LTV, 4.25. That's a 30-year fixed par pricing.
Okay. And Yvette wants to know, is this considered non-QM? What's the max origination?
Max origination, you talk about points or loan size. Loan size is 3 million. Points, broker points, we allow up to 3.
Okay, and with that, I want to thank everybody for joining us today. Jim, do you have any parting words for our audience?
No, I just hope all these folks have a great month and make a lot of money.
Tim, do you have any parting words for our audience?
I would just thank everyone for joining us, and we honestly mean what we're saying. We make sense loans. We're not in the box lenders, and we want to make good loans to people that are going to pay us. And if the loan makes sense, we're going to figure out a way to do it. So.
All right. Well, with that, thank you so much, everyone.